Now, almost 1 week after the gradual easing up of the COVID-19 lockdown started, practically all the banks doing business in Nigeria's commercial capital, Lagos, are yet to roll out full-scale operations, a situation that has brought about a lot of exasperation to a lot of customers. The less-than-skeletal services that are being provided by these banks have led to a rapid undermining of the social distancing directive, which was factored into government's original consideration for easing up the lockdown. What exactly are banks afraid of? Do they realize just how grave their ongoing non-show will impact on the collective effort to defeat COVID-19? Why are they not embracing biosecurity measures that are needed to protect not just their members of staff, but also the general public? These are some of the questions that we're going to be looking at now and getting answers to by speaking with Chika Mbonu, a financial affairs analyst. Welcome to the program. Good morning, Mr. Mbonu.
Good morning.
Good morning, Chika. Well, thank you for...
Good morning, Doctor.
Thank you for joining us on the morning show.
Good morning.
Well, quickly, look, bank customers are not happy at all. And they have quite a number of grievances. First, when the lockdown was first announced, the banks were told that, they could continue to provide financial services. Many of them did not provide the kind of, quality service that the people expected. When the lockdown was, eased, again, if you look at the banks across the country, you find long queues and no provision for physical distancing or even social distancing. And, third complaint, when the private sector coalition began to donate money to the COVID-19 battle, many of the banks donated billions. Now, many of their customers protested that why were they giving money to the federal government? Why did they not just credit their customers directly to show support for persons who were under lockdown at the time? Well, what are your thoughts on all of this, and how can the current situation be improved in terms of provision of financial services by the banks?
Thank you for having me. Of course, on Monday, when the lockdown, was removed and business started again, we saw the crowd in most of the banks. And it was an eyesore, and it wasn't pleasing to the eye. And it made a mockery of the, social distance and rules that were required to fight this COVID. But let me take you, the banks have been mostly vilified. I will try to create a balance here and give you some background. The first thing is, let me talk through to you about the crowds you saw in the banking at the banks. What did they come to do? Why were they there? And then we'll look at what could have been done, to ameliorate or resolve those issues. Now, let me put it plainly. The first group of people that came to the banks on that Monday were those who came to withdraw cash. They came to withdraw cash. And this may sound very, ordinary to you, but that's the truth. And those who came to withdraw cash came for several reasons. The first group of people are those who don't have ATM cards at all. They are scared or they're worried about the 35 naira charge for withdrawal after 3 times. And that 35 naira is substantial, compared to the amount of money they withdraw. So they don't have cards at all. They don't have cards. They don't operate on cards at all. And sadly, these people had money in the banks throughout this period and they couldn't access it because they didn't have cards. The second group of people that came to the bank that Monday are those who lost their cards or, their cards that expired and they couldn't renew them before the lockdown period. And so once the opportunity came on that Monday, they all came to the bank to renew their cards. There are also those who refuse to have cards, again, because of bad experience they've had with scammers. People have, sent messages to them, and they fell for the scammers and lost money. And you won't believe this. There are also very solid people who are, well-to-do, who have just said they don't want any stories, and they don't want to do anything digital. So these people, again, were among the group of people who came to the bank to withdraw money on that Monday. Now, there's yet another group of people, those who came to make deposit of cash. A lot of people came to deposit cash because of the fact that their businesses are cash-driven. And over this lockdown period, they had cash, or they had cash before the lockdown, and they couldn't come and bring it into the bank. Again, this is not the fault of the bank. These people's businesses are cash-driven. There are opportunities for them to use POS for their vendor work, but they refuse to use POS for their own reasons. And so the other group of people are those who have complaints, before in the bank who are not being resolved. And they have called and called and called, and nobody was listening to them. So they had to come into the bank to resolve those complaints. So these are the group of people that you saw in the crowd that day that came into the banks. Now, let me talk about one other issue that you raised, which has to do with the social distance. Because this crowd came into the banking hall in that number, the social distance was made a mockery of. People were desperate, and people were trying to rush into the bank. Remember, they were also told, the banks were told to close by 2 o'clock. And so people had that at the back of their mind, and they were rushing to make sure that they got the services. Now, the other thing I want to bring up to you is this. The banks don't operate in isolation. They operate, there was a general instruction given to them by the central bank to reduce the number of people who come to the, number of workers who come to the banks on that day to about 1/3 of the capacity of the banking halls. And they were also directed not to open all their branches because of the CBN said they didn't want so many employees to be in the bus stops, again, because of the social distance rule. So in trying to solve the issue of social distance, a lot of the employees were not allowed to come to work on that day, and so they were understaffed. The other thing that happened also was that the banks didn't want to open all their branches in one location in case any branch is messed up. And then where will you put all the customers to? So if you put all the branches in, open all the branches in VI here, and all of them are infested, where will the customers go to? So that's why you had this staggered opening of the branch or the banks. So I give it to you. Customers have suffered, but it wasn't just because the banks were negligent. It's also because of the fact that they were following instructions given to them by the government, in addition to customers who are desperate to come and do business in the banking halls.
Mr. Mbonu, certainly banks must also protect themselves. They too have a new normal that they have to adopt to, but they also have a capacity that they have to reach in the country. And the way in which things have been handled this week don't necessarily suggest that the banks have taken the situation as seriously as it really is. But what is clear here is that there is a gap between the people, and the missing gap there has to be filled with technology. What technology do we need to see banks deploying now to ease up the pains that customers are feeling, while also being able to protect themselves and their staff? Because like you rightfully said, we don't want a situation where all branches have to shut down and then there's no bank to go to.
Yeah, I must give it to Nigerian banks.
Yeah.
Nigerian banks have made a lot of progress in digital banking, and let me take a step back. Digital banking rests on the backbone of the infrastructure that we have in Nigeria. Remember that we need power. We need telecommunication. Every ATM that you have has SIM card inside it. They are powered by the generator. And all these things are, how unreliable this can be. So the banks are also relying on the infrastructure we have in Nigeria to provide the services to the customers. That's basically, the problem. You have to rely on the infrastructure we have in Nigeria to provide the services, power, telecommunication, and other resources. So that's the major problem that we have. That's a major problem we have in providing services to customers. The other thing is this: you may not believe it, but the level of awareness for digital banking in Nigeria is still very low. A lot of people have vowed they will not touch digital banking because of the issue of fraud and money they have lost in their account for some time. So that's where education will come up. Let me tell you something. A particular bank I spoke to said, based on the customers that came in, on Monday and Tuesday who didn't have digital banking and therefore suffered during the lockdown period, they have gone back to those customers, and only 30% of them are willing to open an account and migrate to digital banking. That just shows you how bad things can be. But be that as it may, Monday was difficult, but subsequently, by Tuesday, by Wednesday, banks, upscaled their services, had more staff in the banking hall, and the services came back to normal.
Okay, well, I mean, I like the way you are defending your constituency, but some people may disagree with you in terms of some of the things you said, particularly with regard to ATMs and all of that. Anyway, one of the things that came up in the course of the week was the CBN directing the banks not to lay off staff as a cost-cutting or a cost-control measure. Now, what other options are available to the banks in terms of cutting costs, controlling costs, and then allowing their staff to stay? What recommendations will you have in that regard?
You know, I had commented on this issue before, and I said that we live in a capitalist world, and I'm talking from the extreme left now. We live in a capitalist world, and there are so many sectors in Nigeria who have been laying staff or not even doing some other things to staff, and nobody's defending the employees. However, once the banks stepped out to do it, the government has intervened because of the profile of the banks. Now, let me put it this way. A lot of banks can still work. You know, if you look at the analysis of the banks who have been analyzing on our station here, you'll find that one of the ratios we look at is called the cost-to-income ratio. How much, for every 100 naira the bank earns, how much do they spend to earn it? And for a lot of the banks in Nigeria, a lot of them spend more than 60 naira. Only one or two banks spend less than 50 naira, to earn 100 naira. So the cost of operation for a lot of banks is very high. But let me tell you why, what's happening. Each branch you have of a bank in Nigeria has 2 generators, sometimes 3 generators. You know, you can know how much it takes to run 2 generators or 3 generators. Now, a lot of the banks now were recommending for them to move into alternative power channels, you know, to reduce the power of diesel, the cost of diesel and generators. So they're migrating to alternative renewable energy channels, to reduce the cost of the operation of their branches. So that's a major issue. The other thing is also that when banks move to digital channels, it reduces the cost of operation. There's a research that shows that the cost of serving a customer through a brick and mortar, that's a typical branch, physical branch, compared to alternative channels, almost about between 25 to 40 times. So a lot of banks are going to migrate their services towards digital channels. This COVID and lockdown has opened the eyes of so many institutions as to so many activities they can still automate and reduce the cost of operation. And that's very important. So the power issue, automation will help in reducing the cost of operation for them. And then the other thing can be also look at staff, retraining of staff. A lot of staff who may be redundant from this high automation will be retrained to serve customers in the front and help in creating more business for the banks. So I think the banks can look at this and it will help their business.
Well, we'll take a short break. Chika Mbonu, please stay with us, and we'll be right back, and the conversation will continue.
Back to the morning show here on Arise News. Mr. Chika Mbonu, a financial affairs analyst, is still here with us on the morning show, looking into the question, what exactly are banks afraid of? Mr. Mbonu, thanks for staying on the program with us. Before we went on a break, you were analyzing a number of issues. And one thing that you mentioned earlier that I'd like to bring up is the fact that you said that banks have tried to digitize their services with people more, but people are apprehensive for several reasons. And this is something that obviously has been clear to us. We have seen it outside the banks this week, as we have stated. Is the only other option then really and truly mobile money in partnership with telcos?
Even if it's mobile money or partnership with telcos, it's still on the digital channel. And one thing that is very important, and I think the bank should spend more money on, is the continuous education of customers. The continuous education of customers. You know, a lot of people have, if you have a digital account, I'm sure one or two of you would have received some funny mails from scammers who entice people with some funny messages to reveal their personal information. You know, there should be more education in that. I know banks are doing something on that already, but they should spend more time, through the radios, through the TVs, announcements regularly to customers, not to fall for those scammers. because the scammers are the people who make people. Once people hear a story of how somebody has lost money or a friend has lost money, they stay away from the digital channels. That's basically what happens. So the issue of education and education, I want to assure you that we have made the banking industry in Nigeria has actually progressed. The firewalls and security systems against cyber frauds have increased. And even the CBN has gone ahead to establish a process for complaint management for all those who lose money or who have issues with banks when it has to do with digital banking.
Well, I mean, somebody just sent me a message now saying that, well, all the banks, the issue of banks not opening up all their branches has persisted, and that the queues are still out there. And, you know, whether you would like to advise them to open up more branches. But, I mean, that's in terms of reaction from somebody watching this interview. But the question I would like to ask you, do Nigerian banks, do they have substantial levels of liquidity, capital, buffers, to be able to withstand the pressures from COVID-19? And I asked that question because recently, I think it was Fitch that downgraded 3 major Nigerian banks after conducting a stress test.
Well, I mean, the first thing is this, that you know how the rating agencies operate. The first thing is they look at the country. For us as Nigeria, with the macroeconomic headwinds we are facing, the country risk has been reduced, even to negative. So no matter how strong a bank is in Nigeria, you can actually get a rating. It's rare for you to get a rating beyond or above the rating of your country. But I must say this, that capitalization is one area that Nigerian banks have, substantially improved. The Central Bank of Nigeria has done a good work in this respect. Most Nigerian banks are solid. The banks, I can state clearly here that the banks that control at least 80 to 85% of the banking business in Nigeria have the substantial capital required to go through this headwind of COVID. The Nigerian banks are solid in that respect. They have the liquidity and capital to go through this headwind.
So you can say with confidence that we're not likely to see any bank going under or mergers and acquisitions, because the fear of many bank customers is that, look, with the exposure of the banks to the oil and gas sector, to the power sector, where there is a problem at the moment, could it happen that some banks will have issues? Are you saying with confidence that we have nothing to fear? No bank will collapse?
I can state here that, at least I know the banks that control about 80 to 85% of the banking business in Nigeria. They have the solid capital and the liquidity to ride through whatever we're going to face. In addition, the regulatory authorities, Central Bank, NDIC, are using fine-tooth comb, going through the books of these banks regularly to make sure that they survive this problem they were facing in the industry now. The Nigerian banks are prepared for it and they're solid for it. I'm not saying that there may not be mergers or acquisitions. I'm not saying that. But I'm saying in the case of, you're going to go tomorrow and you don't have your money, that will not happen. The Central Bank will not allow that to happen.
Well, that's good optimism that you have as well, Mr. Mbonu, and we'd like to keep that going. But a lot of banks are under pressure because many companies are particularly in risk of defaulting on loans. I mentioned this earlier in the show, and many dollar-domiciled loans are also in jeopardy as well. So I'd like to ask you, do you think that this pressure is going to make banks more apprehensive to lend out loans post-COVID-19 and maybe during as well?
Could you take your question again? I didn't hear you, please.
Yes, I'm talking to you about banks lending out during COVID-19, and I'm talking about this based on the fact that banks are under a lot of pressure, and this is because a lot of businesses are likely to default on loans. So, in that case, do you think that this pressure is going to make banks more apprehensive to loan out money for businesses? Interestingly,
this is a pandemic. It's worldwide. What's happened to the Nigerian economy and what the Nigerian banks are facing is basically what banks worldwide are facing. And the banks are working from the same sheets on this. Luckily, you do recall that when this issue started, the Central Bank of Nigeria gave the banks a window to give forbearances to their customers. So what a lot of banks are doing now are restructuring some of these loans in line with the circumstances on the ground now, because the customers' cash flows have disappeared and they won't be able to pay the loans in line with the previously agreed terms. So banks are working along that line to make sure that the loans that will default are reduced. Look at it this way. Despite forbearances, a lot of businesses are going to be in trouble after COVID. We already know that the non-performing loan ratio for the banking industry will go up higher, in the industry. But we know that that will not, that's not terminal. It will not kill the banks.
Well, since January, we have had a series of interventions by the CBN in terms of directives to the banks. The most recent one is the directive about not laying off staff. Before then, we had a 1.1 trillion that was pulled out by the CBN. Now, do you think that the CBN has been most helpful to the banks in terms of its interventions and directives, or you think that those interventions have been, for the most part, counterproductive on the part of for the banks?
I think you will notice that the CBN has been commended by the international finance community for being very proactive in responding to the issues arising from the COVID crisis. No, they've been helpful. They provided liquidity to the banks. You see, what normally happens in this kind of situation is that liquidity may dry up for the banking system. But the Central Bank liquefied the banks by providing that 1.something trillion you mentioned. And so, on the back of that, the banks are able to lend that money to the deserving sectors of the economy, as CBN has enumerated. So CBN intervention has been very useful and helpful in resolving the issues that would have happened if the money liquidity was not provided. Yeah,
but you know also that there are some people who believe that the CBN has been squeezing the banks a bit too hard.
Well, let me tell you something. CBN is always Central Bank of Nigeria is always in a very difficult situation. In providing liquidity, it keeps its eye on the foreign exchange rates. Now, because our economy is almost monoproduct economy, now each naira that you push into the banking system, most times finds its way, leaks out to go and chase the few dollars that we have. So each time, the Central Bank of Nigeria is always keeping its eye on managing the exchange rate. So if you push out this much naira into the system, where there's no production now, will it go and chase dollars? So I pity the CBN sometimes because it's a balance. Do I provide liquidity into the banking system? If I provide the liquidity, is it going to hurt the exchange rate? So that's the quandary that our Central Bank of Nigeria always faces in that respect. So if you hear them squeezing the banks, it has to do with the fact that they're keeping their eye on the exchange rate. Do you recall our results have been falling falling for a long time now, from a high $50 billion to a low $33 billion that it is now.